get you, Partel, to say a little bit more about what you do, because you probably haven't heard a bit more about what you're up to. I think most of the other names. Why don't you just explain what you guys are?
Sure. My name is Partel. I'm the CEO of Bondora. We operate a pan-European marketplace. We focus on unsecured consumer loans. We originate those loans in Spain, Finland, and Estonia, with the asset or focus being on effectively near-prime loans. We operate in those countries because there's a huge opportunity due to the fact that these markets from a consumer lending or banking side are highly inefficient. In most cases, only a few or a handful of banks control the most of the market, and or the digital capacity for these traditional lenders is very non-existent. So consumers still, in order to get a loan, have to go to the branch offices. That's the opportunity we're tackling.
Okay. And Andreas, does Fitch actually do anything in the marketplace lending area at the moment?
I'm in the business of rating securitization transactions.
Okay.
As you very well know, in Europe at the moment there hasn't been
exactly.
any securitization. So my answer to that would have to be no.
No. But you're obviously actively looking at the area in a proactive way.
So we are actively looking at the market, at the platforms, and we hope to get involved if there are any transactions in the future.
Okay, fine. Okay, so I'm going to pick off Samir. Let's talk to you first. You're probably, I think you are the biggest single originator of alternative finance SME loans in Europe.
Yeah, probably.
I think you probably are.
You'll know better than me.
Yeah, so you are. So you've got the biggest volume coming in. And I noticed that your first structural your most recent structural innovation was you did an investment trust. You didn't do a securitization, and that's slightly. I find that slightly curious, actually. I think it was a good move, by the way. I think permanent capital is a great idea. Nevertheless, you understand why I asked the question, which is a lot of institutional investors say, well, why didn't you do a securitization first? Because that would sort of make sense, really, because you've got a lot of throughput. You guys have got the metrics, as you said earlier, to be able to properly put together a securitization package. Why didn't you do that first?
Well, I mean, I think if you look at securitization as a word, obviously we're talking here about a very particular type of securitization, which is debt. It's rated by Fitch or Moody's and S&P, gets sold mainly to insurance companies, people like that. If you take a much wider definition of securitization, what Marshall Wace Eaglewood pioneered with their investment trust and what Funding Circle subsequently did, is also a form of securitization. Arguably, what we've done all along is a form of securitization where we're dividing up loans, allowing people to access them. So it depends whether you want to be purist or not about it. We've taken the path I talked about in my presentation earlier about getting as much diversity of capital as possible.
Yeah.
And we've chosen to go in a certain order. But whilst there haven't been these particular types of securitizations in Europe thus far, there have been quite a few in Europe. As I said, Eagle would have done quite a few, other players have done quite a few. I would be very surprised if this year we didn't see the first ones in Europe.
And will they be from you?
Well, some of so just so everyone knows, I'm standing in on this panel for Partel, who's our head of capital markets. But I think the first thing to really note about marketplace lending and where it's different in the securitization sense is we won't securitize the loans ourselves.
Yes,
as I've
exactly.
made a great song and dance about, we don't take balance sheet risk.
Yep.
We don't hold loans on our own balance sheet. So investors that have lent through the Funding Circle platform, and you can Google it, many of those investors have said they would like to securitize loans in the future, and we will help them do that if they want to. So at the point that they're ready to and they want to, there will be these securitizations taking place.
Have any actually talked to you?
Yeah, I mean, we talk all the time. I mean, as I said, these institutions have said very publicly that they want to securitize our loans. And again, I talked about a little bit earlier in my presentation, there's been a lot of analysis by rating agencies like Fitch. So Moody's published a report recently looking in detail at SME loans within Europe, and case studying Funding Circle as well. and their conclusion was that these loans were not materially different to the loans that were being originated by banks,
exactly.
which hopefully doesn't surprise people.
Yeah, so.
We're doing pretty much the same loans, just in a more efficient, more cost-effective way. So, and these loans have been securitized many times in the past, and they will be many times in the future, by banks. And so I expect there to be a lot of demand for more cost-efficient ways of accessing those types of assets.
No, because that's right. Because there's a perfectly decent European SME securitization market. It's not huge, though. Not by comparison, I think, with the American market. I mean, Andreas, on that point, it's not as big. I went to a city event with a bunch of securitization experts, and they were busy talking the European SME sector. And even though you're absolutely right, there has been existing, it's not a very big market. And in a great scale of things, even if the marketplace lending market does move towards that model, that model's not very big. There's very small origination flows in the great schema of things.
In the SME scheme, or in the SME world for sure.
Yeah.
People have been over the years been speculating or making statements on why that's the case. The European Commission or the European Union certainly wanted to push it. Our view is in many ways that the key reason why it's not working out is that the underlying assets on the normal bank lending SMEs don't have the return that would be necessary to ultimately make a securitization viable.
Yeah.
Because the spread that is being demanded by securitization investors in the SME space tends to be higher than what the underlying SMEs pay.
Yes.
It can never work out. So either the investors demand less or the SMEs have to pay more. Something has to give, it can't work out otherwise, as nobody wants the SMEs to pay more and investors don't want to ask for less. You kind of don't really have a functioning SME securitization market at the moment.
Can we just be specific about what they're likely to be asking and what they're likely to be getting?
Well, as a rating agency, I can't give you specific price information, but whenever we're speaking with a market, you look at where the bonds are trading, where secondary markets are. If you look at the few transactions that are being done, it seems quite clear that there's a disparity between what is being demanded, the costs involved in the securitization, and what the underlying assets pay. It's somewhat in contrast if you look at other platforms like Funding Circle. Obviously, the SME, if you just look at the face, most of them comes at a higher return. But then again, a lot of bank lending to SMEs is actually secured.
Yes.
Not all of it. So again, it's a different risk profile. It's just a different perspective. To turn that a bit to the consumer space again. It's probably a bit more functioning in that context. You certainly have a securitization and a flourishing securitization market of consumer assets, being that auto, being that unsecured. Credit card is a form of unsecured, and that is in size still dwarfed by mortgages, clearly, because the mortgage market is just larger by definition. But in most European jurisdictions, there's a flourishing market for securitization of consumer assets.
Partel, just in your view on this, why haven't we seen a securitization yet? Is it just because we haven't got around to it, or is it, as Andreas might be suggesting, there's a mismatch of expectations?
First of all, if you look at Europe and if you look at unsecured, the area that we've been pursuing unsecured lending, that even in the banking space, there's not that many transactions per annum that are occurring even in the traditional space.
Yeah. So
you have approximately 2 trillion euros of assets outstanding, and out of that, I just went through the Moody's deal book a couple of days ago, and there's maybe 10, 20 max transactions per year. So now if you go into marketplace lending, which is segregated then in all these different segments, then there's not enough volume, there to actually go through. These guys want approximately 100,000 euros, for the transaction. So if you just pile up all the costs, then, and if you look at the typical yields that the assets have been yielding, then it doesn't simply make sense yet, because there's still a lot of interest from the public to directly buy those assets. The reasons why we're looking at different structures is simply that there's more people, more investors who would prefer a structured product rather than buying notes directly.
Yes. Okay.
So, and I think for us the different the reason why we're really going for is just to more traditionalize the product, make buying these loans that are originated through new technology-driven channels from an investor perspective much more traditional. So they can plug it in with all the all the rest of their stocks and bonds they have in their portfolios.
Andreas, and I just want to pick up on this point. Just for those of us who are not massive capital markets experts, you raised an interesting point, which is securitization over here, and that's part of a broader structured products space. But surely you could just design stuff that's not a securitization, as simple structured products or notes or something like that, just a simpler product, because it sounds like one of the obstacles is simply construction cost.
Yeah, like securitization, many people view as a technology, and as a technology it's employed. That doesn't mean that you have the old singing and dancing transaction where we as a rating agency would get involved with the public marketing. You may very well, as what most lenders have in place, I would call them the warehouse structures with bank lenders or with other lenders. What they're essentially using is a securitization technology.
Absolutely.
They're not visible to the public in that way, but at the end of the day it's a similar structure. So
what is it that to those people in the audience who are not capital markets people, from your perspective, what is it that you are looking for out of the structure, the package?
Well, the structures that are being put together are very similar to what your normal structure is, being it an SME structure or even an unsecured consumer structure. I believe what most platforms at the moment struggling with is ultimately building the track record that is necessary to go into a public securitization market. We as rating agencies obviously have given expectations on data, and even somebody who says, hey, I have 5 or 7 years of track record, that's fair enough, but most of the time if you look at the early years, the origination volumes are incredibly small. The scale ultimately only happened in the last few years. So the track record is in most cases what's needed. Once you go to a pan-European platform, it's sounds great, you get volume pan-European, but at the end of the day, a lot of the markets are still localized, and then getting the volume on a local level is probably difficult. And I have to admit, I'm not sure whether the last time anyone did a pan-European structure with various jurisdictions in any asset class has probably been some time ago. They're just not very common.
So how do you? None of the platforms here really. I mean, Funding Circle, you've got a good few years in the market now, but none of them have 5 or 7 years as Zopa does in the consumer space. But so how do you deal with it? Surely it's a non-starter then, because you just don't have the history.
Correct. In many ways, yes. We have communicated our view on that already some time ago, but I believe from our side, I would usually start actually at the beginning from it. So we're looking at performance data track record. Okay, you can sometimes look at proxy information, but my key starting point is always, so how does actually the platform analyze the credit themselves? I believe the panelists beforehand asked it as well. Okay, you need to understand how the model is being set up. And in the consumer space in the UK at least, if you tie yourself into what credit bureaus provide, you get actually a very rich level of information and can possibly develop similar underwriting models and what possibly other established lenders can do, because the source of information to you is identical. I believe in the SME space that's a bit more challenging, because the data set you're getting from the credit bureaus is not as rich and is not as substantial. If you go to other markets across Europe, the credit bureau information again is not as rich and is not as deep. So even before you think about building up a track record, the key question is how do you actually build your underwriting model to start with based on the data that you have. And in many ways it even starts at that point, that you probably need to build your own data set for a time being, so with your own underwriting factors, that you are able to calibrate your own model before you then even can start to convince other people like ourselves that the model that you have developed has actually substance. So you're probably not only talking about that, you're probably having a second level effect. And that's in some of the sectors probably a bit more challenging even than elsewhere. So I believe the first time I spoke to people in about peer-to-peer as it was called back then, and marketplace perhaps today, was 2013. It's the first time where we as a rating agency got contacted about it. 2016, still no public deal. I hope this year probably we see the first one, but in many ways people just have to have a bit of patience and expect and understand that there needs to be a bit of time to convince people.
Yeah, I mean, I'd just love to be able to answer some of the points Andreas made.
Yes.
So the first is about SME lending and bank rates. What you've seen through the change in regulatory capital requirements, especially now under Basel III, is that the amount of capital banks have to hold against SME loans has increased dramatically. And the way I would picture this simply is the economic profit that a bank makes in terms of pure spread on an SME loan is higher than any other asset class that they participate in. But the return on risk-weighted assets, which is the amount of capital they have to put across against these loans, is actually the lowest. Yeah. So you've got this perversity in the SME market. So the reason we don't see many SME loan securitizations by banks is, unsurprisingly to people, they don't do much SME lending. They stick to a very small part of the population, and there's a big regulatory arbitrage that has been created there. The second reason we haven't seen these securitizations from marketplace lending in Europe is very simple. We're actually a lot smaller than the US players. So Funding Circle is, on a cumulative basis, probably the largest European platform now. We've done about $2 billion in total. Lending Club, largest, largest marketplace in the US is 15 billion, and so far is approaching that level. So they're just a lot bigger. So I agree that we just need to have a little bit of patience. Rome wasn't built in a day. And I'm pretty sure that we're originating assets which are high quality. The average loss rates are actually much lower than the US platforms. And so I'd expect those to take
But how do you deal with the longevity question? Because longevity is quite a critical issue. I mean, you're just going to have to wait for 2 years.
Well, I think for new platforms, Andreas is probably right, it's very difficult to securitize loans when you haven't got a track record. Funding Circle has been lending for 6 years now. As Simon rightly pointed out, the weighted average duration of these assets is actually only about 20 months.
Yeah.
When you look at the amortization profiles, and you can very quickly draw performance curves. There's a lot of rich data which you can benchmark SMEs against. So I think we're approaching the point now where the track record is sufficient. And if you look at our investment trust, the types of people that have become major shareholders in that, people like BlackRock, British Railway Pension Scheme, these are the same types of investors that would be buying these types of securitizations anyway. And the final thing that I think I've noticed, which I think is quite fascinating, and the problem with securitization markets is they come and go. People get quite worried about that kind of stuff, and we're seeing some retrenchment in the US right at the moment. The thing that I found very interesting about the SME space versus the consumer space is, and you see it in a small way on our fractional marketplace, is we've got a lot of government or quasi-government buyers starting to participate in that market. And actually, what we're seeing, we're seeing a lot of interest on the securitization side from government or quasi-government type entities for these types of assets. Put a different way, the thing I've always thought that's beautiful about marketplace lending is in a downturn, and say a 2008 scenario, we don't need governments to put billions into banks when really what we're trying to do is stimulate the real economy. We can just bypass them completely, go straight through platforms or through securitizations. And I think you're going to start seeing that in an increasing way. So my expectation, I can't speak to the consumer market, I have no knowledge of that, but on the SME side, I actually believe that securitization markets will remain more resilient through downturns, mainly because of government and quasi-government participation.
Interesting. Partel, what's your take on this? I mean, again, Andreas went through quite a long list of things which are probably a bit of an obstacle, really. How are you going to overcome them as well? I mean, it sounds, I have to be honest, sounds on the outside, it's pretty insurmountable. This year, anyway.
I think, in order to answer the question, I would go back to what Samir said in the beginning. First of all, it's what is securitization? We can be very purist about it and say, it needs to be rated, and there's a whole bunch of things that you have to check. The other aspect would be, there's a lot of small loans, there's a lot of cash flow, and you convert that cash flow into a product.
Yeah.
That is, that is tradition that someone, family office, a wealth manager, or a private individual can simply put in their sort of safe.
Okay.
That's it. So now, if you take this approach, then there's many ways to go at it.
And that's what Samir was saying, because you've got an investment trust which is a product.
Eventually, but if you don't get the securitization rated, or if you don't do a public placement, or if you do some other aspects, then you simply have to compensate the lack of a public liquid market or a lack of a AAA rating through yield. So if you're able to pay, if you're able to pay a higher price for the capital, and you can still, provide loans to your, consumer or businesses with competitive rates, then there is no issue. If you're operating on 4 or 5% sort of gross yields or gross spreads to the underlying borrower, and then you're trying to go to the public markets and securitize and pay all those fees in between, then you're going to have an issue, and you need to sort of you're not going to be able to go to private markets, or you're not going to be able to go to channels where you simply have to pay more until you have the track record, until you have the structure in place.
Andreas, so what do you think to these? They all sound. What the message seems to be, actually, we hear what you say about public securitizations. That does present something of a challenge, overcome. That will be overcome, no doubt, in time. But that doesn't mean you can't have other products, and those other products could proliferate, and they already have. I mean, the Funding Circle Investment Trust, I'm sure you guys are thinking of similar things, Partel. There'll just be other products that are out there, and they are likely to come this year, but they might not have your rating on.
Correct. Obviously, it's a huge disappointment for us. But that aside, so no, to be frank, so first of all, marketplace lending in many ways, I believe, well, I'm not even sure I would call it an asset class as such, because you will have SMEs, you will have consumer, you may have real estate, you do have it's in many ways an origination platform.
Exactly,
and, I know everyone runs around on remote origination and internet origination, but there are a number of established players who kind of do quite a lot of that as well. There are in several markets people who have originated through mailing or through phones or whatever it is, and they didn't have any direct customer interaction either. So it's an origination platform. There's a lot of talk about, where does a consumer or an SME have it in the priority of payment? I don't personally believe that is that different to any unsecured product that exists elsewhere. So we look at it as an origination platform. And in many ways, the platforms suffer from the same difficulty as any other new lender, which is you need to build up a track record, you need to convince people. And as with the new lenders, and that's not unique to this, they typically work with institutions with full faith in them that are willing to lend the money, usually actually with securitization technology, but not on a public market. And the ultimate end game after once you have achieved that is then probably the exit route through public securitization, which tends to be the most price competitive one. But I believe you have to walk before you run. And most of the players, they obviously know it much better than I do, but you first of all work with the institutions who put down the money with securitization technology, but not in the public market. But eventually the ultimate goal will probably be a public market. Provided you have a sufficient size, because you need size. You can't do really a public securitization with 50 million. It's usually not economical. So once you have size, once you have built up a track record, the ultimate direction probably will be that. 2016, I believe, we will probably see the first one.
Oh, you think you will? I was actually going to ask you that loaded question. Where do you think we'll see it? I'm not asking you platform. Is it going to be an SME, or do you think it's going to be consumer?
It could be either, but it's very likely coming from the UK, purely based on size. The other markets lag a bit behind if I look at the volumes that I've seen, unless somebody has great aspirations and does a pan-European structure to get the size, but that probably would have other challenges. But in many ways, I believe something will happen. If it's not 2016, it will probably be soon. But I don't also think that you will get suddenly a flood of transactions, that you're getting multiple deals per year, because there's just not the asset volume around for that.
So you think we will see something in 2016?
I believe there's a good chance.
Just quickly, Samir, do you think so?
I'd be very surprised if there wasn't something in 2016.
Oh, okay. Partel? Okay, very interesting. No, trying to get them on the board. Okay, well, look, we've run out of time. Put your hands together. Say thank you very much for this panel. It's excellent. Thank you, guys.